So here is the rising wedge pattern, and in the trade review section I'm going to share with you how to actually trade the rising wedge pattern in a price action way together with the reading the supply and demand signature and to interpret the price movement out from this rising wedge pattern, so you know that there's actual difference between trading the pattern itself and also trading the price action way. Hi, my name is Ming Jong and welcome to another episode of the market analysis for the S&P 500 E-minis futures. That's for the session of 17th of December. In this video, as usual, I'm going to share with you the market recap from yesterday's session and also the trade review, which involved the rising wedge pattern with the price action trading way, and in the 3 minutes time frame, where I'm going to cover the entry, the exits, and also the rationale behind. And going forward, I will also share my trading plans together with the key levels that I'm watching for the session later. Alright, so let's just get started now. So as usual, let me go back to the daily time frame and let's just start from the daily chart to give us a quick overview of what's happening for the past few trading sessions. So as we can see in this daily chart of the S&P 500, last video I talked about this bar right there. We see that there is a spike of the supply and there is a failure to overcome this previous swing high level, and that shows up in the rejection bar and close near the low. That comes with the increasing of the supply. I mentioned that that's bearish. However, the next bar actually shows that there is no downside follow through, and instead it just recover from there. So pretty much this reaction actually just tested the intermediate support level at about 36.40, and subsequently it just reversed from there. Alright, so let me just go down to the hourly time frame and let's just extract a bit more of the information from the hourly time frame. So we can see that last video that I talked about this supply zone right there, and where in the session, this session 2 days ago, we see that there is a pretty much like an uptrust action and failed to overcome the previous supply zone right there, and followed by a very sharp reaction comes with a spike of the supply level, but subsequently no downside follow through, as we can see the next day recover and manage to just overcome this supply zone as well. Despite that, it just have a very shallow type of a reaction right there. I still managed to get a trade out from this the supply zone right there, but subsequently you can see that there is no follow through to the downside with these two demand tails showed up and followed by a very nice run up and close near the high level at the swing high. And yesterday we see that is relatively tight range session, so pretty much it's just fluctuating within the 3680 to about 3700, and so far it's just looking relatively bullish and is on the way to test the previous swing high level at about 3715. Alright, so let me just quickly go to the trading time frame, which is the 3 minutes time frame, and let me elaborate a bit more and also in detail about how to actually trade the rising wedge pattern in the price action way. And here you will just notice the major difference on purely trading this side of the pattern, and together with using the price action analysis together with the supply and demand, and also by looking at the swings up and down. So all in all, it's just about context. So before I dive in, let me show you the context as well. So pretty much I rely on the supply zone in the hourly chart. So let me quickly go back to the hourly chart and show you again. So that is actually the level that I am relying on. So I mentioned that you first need to overcome this supply zone right there. So that is pretty much, let me see, about 3660. So I want to see how the price actually react around the level at 3660, which is the supply zone right there. So let's go to the 3 minutes time frame and let's just take a look how the price actually react in a 3 minutes time frame at the level of 3660. That's actually correspond to the supply zone level. So we can see that just prior to the US Open, in the Globex session, we see that it actually just reached 3660. That's somewhere around 5 p.m. at my time zone. So it's probably another just 5 hours before the US market open at about 10:30 p.m. at my time zone. So you can see that first it just penetrate the 3660 level and without much reaction. Subsequently, this one is interesting because it's actually forming a rising wedge pattern. So this is the rising wedge pattern I'm talking about. So pretty much it simply means that once it's approaching the 3660, that's the supply zone, and we see that the momentum to the upside actually slows down. So the momentum to the upside is fading. So what it actually means in this rising wedge pattern is this: we have a shortening of the upward thrust. So that suggests that the up momentum is fading. So it doesn't look very much bullish. So in fact, I just bet on the bearish side. So what I would like to see is actually this kind of the breakdown to form a sign of weakness. So let me just zoom in. So let me just explain to you, I think the traditional way of just trading this kind of the rising wedge pattern is pretty simple and straightforward. You pretty much remember or recognize this kind of the pattern by the rising wedge pattern, and subsequently you just trade when the price actually break out somewhere around here, this, or maybe you can trade the breakout and pullback, something like this, or even simply this reversal bar right there. So you can just trade based on this traditional rising wedge pattern breakout, or just trade another pullback and reversal type of a pattern. But like I say, the price actually moved not because of the shape itself, but with the influence of the supply and demand. So the reason that actually forming this kind of the pattern is because of the losing of the upward thrust, or the losing of the up momentum, because you simply can see that the upward thrust is getting shorter and shorter. So that's why it just formed this kind of the rising wedge pattern. So apart from that, what I would like to see is some kind of the weakness. Otherwise, with this kind of the pattern, there is still a chance for like this kind of the pullback and reversal and continue to the upside. So I want to see some kind of the weakness. So what actually formed the weakness? So this is the swing, the downswing that actually breaks down from this rising wedge pattern. So that actually comes with the increasing of the supply. So that actually give me some kind of the confidence that we just have a weakness in the market itself. So my bias is definitely to the downside, and I'm just looking for the entry. So what I'm looking for right after this bearish action or bearish swing, I just wait for a test. So here comes the test. You can see that these two bullish bar act as a test, and followed by this rejection bar as a confirmation. So we have a sign of weakness, shallow type of the pullback, or the very weak rally up, and followed by this reversal bar. So right after the close of this bearish bar, I just enter short position, anticipate to trade to the downside, at least probably let me see, I thought it could just retest somewhere around at least 3650, if not 3640, the swing low level. So I just enter short right there, and you can see that that actually just made me a bit nervous, because right after I entered the short entry right there, and we didn't really see immediate downside follow through. In fact, it just kind of forming quite a lot of the candles, 4 or 5 candles, and we see this breakdown. But still, the price action did not look very bearish, and especially if you look at the supply level, is pretty much that lack of high commitment from the bear itself. So it just hang around there for quite some time until we see this bearish capitulation bar, and I thought that okay, so that is the way to go and it should start from there. But still, we see a relatively quick recovery, and it just makes me feel like I just want to exit right away. But I just still keep waiting for another swing down, and eventually, finally, I see this kind of the movement. So that is what actually gives me more confidence, despite that it's already about 12 a.m. in my time zone, so it's kind of late. But I see that supply is increasing, so that should actually give a real breakdown and to just continue to the downside. But unfortunately, we see that there is a increasing of the supply level, yet we did not really close below the swing low. And immediately we have another reversal bar that comes with a very decent volume. So right after the close of this bullish bar, I just exit my trade, my short trade, because certainly this trade actually lasts for quite a while, somewhere around about 11 to about 12, so about an hour, and it didn't really go to the target that I desire or that I wish. So obviously there is something wrong with the trade. There's no downside follow through, so I just want to get off the trade immediately. And here is the confirmation bar that get me out. So overall, it's still a profitable trade, like below reward to risk ratio of 0.8. Not the best type of the reward that I wish that I can get, but still, I think that I get a very good exit, because right after the exit we can see that it just keep forming a higher high, higher low, and it's a straight uptrend, a very nice uptrend from there. So if I did not get out from this, then definitely I think this breakout right there should be very clear, or even this portion, the low right there, is relatively obvious signal to get out of the short entry. So if you still trading the index, then definitely you can just find some kind of the breakout trade or pullback from there. If you are kind of the aggressive type, certainly there is some kind of the structure right there to enter a long position. Breakout, pullback, reversal, or even this kind of the reversal as well. So a very nice uptrend right there. Alright, so this is how I actually trade this kind of the rising wedge pattern. Not because of basically just breakout from this rising wedge pattern, but because of a lot of the other details, like this kind of the sign of weakness with the increasing of the supply, and also the inability to rally up. It just kind of hit the support and resistance right there, and this reversal bar actually get me in. So the context is actually with 1 hour bar. So once it actually hit the previous supply zone in the hourly bar, and you just losing the up momentum with this rising wedge pattern. So once it's actually break down, showing inability to rally up and forming the confirmation bar to get me into the short entry. So this is the difference between trading this rising wedge pattern itself alone and versus using the price action way to analyze it rationally. Alright, so this is the trade review, and let me just go down to the hourly time frame and let's just take a look at the current market right now. So far, right after this failure to the follow through to the downside, so that is this weakness with the spike of the supply, yet we did not see any follow through to the downside. Instead, it just reversed the next day. So we see a reversal right away next day. And yesterday's session, I did not have any trade simply because it just did not match any kind of the setup that I am used to. So we can see that yesterday we see kind of a failure right there, but pretty much it's just a test. So we have a breakout, a test of this previous consolidation area, and subsequently just go up. And during the Globex session, or during the Asian, now the European London session right now, is challenging the previous all-time high level at 37.15. I think it just touched the level right there. So I just want to see how the price actually respond or react from the level 37.15. So maybe there is a short opportunity right there, or maybe not. So we just need to see how it actually react from there. In terms of the next resistance level, so far I think it's an all-time high level. So I tend to just use this kind of the traditional type of the trend line. Maybe there's certainly a trend line right there. So I just connect quite a few lows and just move it up. Okay, so now we have a channel right there. So we can see that there is one touch, second touch, third touch, and pretty much that we have not seen a second touch yet. So maybe can just go to somewhere around maybe there 37.60. So that could in line with this overbought line right there, maybe 37.60 or even 37.70. So that is the overbought line. Then once you hit overbought, then maybe you can just do something like this and travel within this up channel. So my plan for the session later is still definitely looking at the previous all-time high level at 37.15, and let's see how it actually react from there. Otherwise, next level will be the 3700 level. So as long as it stay above 3700 level, then certainly it can just go up to test a higher targets. If it fails right there, then maybe another short entry, short opportunities. The next support level, I think this is kind of a intermediate type. I'm looking at the about probably 3670 level. This is the end of the video. Hope you enjoyed it and get something useful from the video. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now. And do remember to subscribe to my YouTube channel, and also to get my weekly stock watch list update for free in email, and the link is in the description below. Just sign up for free. Thanks for watching. I will talk to you soon.